We're going to talk about a specific chart. It's called an index. S&P daily. S&P 500 daily index. And what we look at is where the summer rallies started and how we pulled back once we made that rally high here, and we went through this together, is how the daily reversals start and how to understand these big red bar daily reversals, okay? And what they mean over time on a longer daily time cycle, which will tell you the price action trend cycle is what's important. So that on an intraday level, when you are getting the short debit, the contraction starts and it really keeps going. And any counter daily bar is going to be a failure bar. See? You will get little rallies when you first put in tops. There are 4 stages to market tops, index tops, okay? One of them is that you reverse, you come to the lower half bar, bam, and you have more volatility in the front side of the trend when it first starts to change. So you change, and then that's when you see the more, daily volatility after the change takes place, like it did here, and it was descending in the SMF ratio. The volatility pops could not meet the SMF price action requirement, and that next red bar is how they start down on a daily level. And that's just the volatility that, buying off the bottom and selling back again. And you'll get these daily, but notice that all the highs, notice that these highs at these next big reversals, this was the biggest one. And it just kept going down. And we finally made the bottom over here. And we rallied up. And we did the same thing here. But from this original bottom right here, is that if this bottom holds, then that means that there's upside to the S&P. Because there is. And the thing about it is, on Monday, we're going to be trading it. There's going to be a lot of economic headline data. And that the U.S. needs to also please its counterparts around the world by making sure that there's an actual decision process that's going to be made the right way, right down to the 11th hour, if it has to be, so that Asian markets are calmed down. Because if they start selling off, that means the S&P goes down. That's another thing. So on these daily reversals, and this would apply as well on a 3-minute, so you can look at it in both ways. But the daily reversals, you can see the expansion in the delta expansion in the SMF platform, right to the lines perfectly. Okay, and they're calculated ahead of time. It does it all for you. The thing about it is, look at the strength off the bottom, and we're right back up here at the high. There's going to be enough political event cycles to either volatility break the high to the upside and or break this last low right here on the daily. And that's going to be dependent on Sunday evening. The later that we get into the Sunday evening when those markets do open up, is that what is the U.S. doing to basically come up with a resolution. And then people like the plan, that's great, and things move on. So it can go either to the high side and or to the low side. What we're looking for in the S&P is that that news does come out and people like the resolution, then we're going to come up here and break through these highs. And what we're going to be looking at that time are these calls. And I'm going to put the 1370 call in this market minder. And it's an August one. Okay, you can trade the weeklies. They're more scanless in price action though. And that's the part where it's hard for anyone to know what liquidity is really supposed to be at the current market prices. Versus, because there's so much machines involved these days, and buy and sells, and technology has changed, things do have a tendency of moving a little bit different. So a good thing is that this 1370 call That's up and out of the money right here. We already looked at the chart because the chart told us when we were at the bottom of the cycle now. When we were at this bottom cycle here, you can see that this bottom cycle here, right here, this run is also part of that ascending daily price movement off the bottom in the S&P calls. And that this is a 1370 call up and out of the money. And there needs to be a 1370 call up and out of the money. Does the S&P actually have to go there? No, but it will cover your upside volatility. It will cover your upside volatility, price action volatility. In case things come out favorable, you're there. And on the flip side, though, we'll take a look, though. If we start another one of these movements down like this or movements down like this, then we will know to transact immediately. And we even have over here, I'm going to throw in the 1345 call here. That's 1345. Then I'm going to throw in that 1345 put also, okay? Because I'm going to want to know what they're doing. Right now, I have here the 1345 call. And below here, I have a 1345 put bar, okay, and a call bar. The S&P closes at 1345, so we're at both strike prices. And here in the SMF platform, naturally is a chart of the S&PX daily index. And when we look at these things, we looked at, when we broke out this last cycle here, we looked at how the ascending price action was rising in that 1345 call. We had a 4-day breakout in the call on the S&P 500. Here we gapped down, and this side of the S&P 1345 put is getting wholesale. Okay, and it can go lower, and this can still continue to break higher. That 1335 call, let us not forget that right here was a high right above $30, because it was. It was 31.50 on 7.7, okay, and the low was 27. So my point of it is that we hit that low right over here at 7.55 on that S&P. That S&P on 7.18, I guarantee you, let's take a look at our chart and see what it says on that date. So that date there is 7/18. How about that? So let's go over here and let's find out here. Let's pull up the hood a little bit. There it is. There, what date was that? That was 7/21. 7/18 had to have been somewhere over in here. Darn thing, it might freeze up, sometimes it does. So there's the 19th breakout. Then there's 18 right here in this red bar. So let's blow this up. Let's go back there and get that. Somehow it went down. Let's get the spyglass and let's take just this piece right there. There's the original daily breakout, MMT. And here's that pullback I'm talking about to this half bar right here. And what day was that on? 6/29. Okay? And from 6/29, we went 1, 2, we consolidated half, and we broke to the high, that reversal. That's what we're going to be looking for. Something like this here, MMTs, is what we're going to be looking for. Rather we go up on good news and break the highs, whenever it comes, it's still going to be looking for the weakness in price action that builds at reversal tops. Versus these are breakout bars above the previous half bars on the way up, and these are as well on the way down in a descending mathematical neighborhood. Once they hit their bottom, they're confirmed like this. So this is that breakout that happened, and here's that date right here. Let's get it up here where you can see it, 7/18 down here. And the half bar was 1305 on the S&P at that time. That was down here. So that meant if you were buying at that time down here, the 1345 call, you can see clearly the ascending, you can see the bottom, and it's confirmed above this half bar. And bam, you need two equal bi-action bars. And bam, you're testing it. So you can go up higher, and this can go, this 1345 call can continue, because you got to remember, when you were buying it, you were exactly 40 handles below the market, because you were 40 handles. Let's go take a look down here. I do see the contraction, and I see the ascending breakouts here. When they're closing above on a daily level, that closed 20.8 handles closing above this half bar. That meant you had to be net long. That meant that equities, when they hit their support levels on that day, they too were breaking out higher in this little last 5-day cycle. This is last week's trading right here. Okay? And this over here, well, that's where it started, and we pulled back into it, and there's still a lot of uncertainty out there. So what I'm saying is, somebody's going to have a solution. When the solution is met, it's going to hold the support on the S&P 500. We'd be looking for the bull to come off that sideline immediately. It will show up in the platform. Equities would be, we still have a lot of earnings, though. Remember that these days right here from the bottom up, you've been in the earnings cycle, and you've had Apple, you've had Google, you've had Yum Brands do okay, you had IBM do okay, you had several of them that did okay. And so that supported the ascending price action and the retest of half of that bar. This is the last highs over here where this reversal is. We're looking for a change. If we see it, then we'll transact it. And we know that this is going to be a key bar on the S&P at 1336. That's going to be the drop down support right here in our system, 1336.33 for Monday. So this last daily bar right here, a half bar, is 1341.53. This one right here. Okay? 722 right here, this date column. Bam, there it is. So you need to know what this half bar was right here. And what date was that? That was on 7/8, okay? This was on 7/8. This is the bar. Right now, it's a half bar. This is the reversal bar on 7/8. What we're looking for is the same type of reversal bar in the middle of this half bar. That's 1345.05 on the S&P 500. And half of this bar, which was set back on 7/11 of 2011 on the way down, okay, and equities were selling off, intraday reversals were going along with the leadership in the S&P 500 stocks, which meant that they were shortable the whole time, because they were. And we put the bottom in here. So here we are in the S&P 500, and the thing about it is, if I'm looking at this 1345 call, I know where the S&P was when it was down here. That hit the intraday low below 1300. That was the neckline. It got right back above it, but look at that buy. Bam. And look at the contracts. Day 2. Here is the gap up on the contract, a narrow inside range, and then bam, the breakout to the high, just like the S&P over here. But you would have had to been buying at least $45 maybe, or not 45, but $40 above the market, let's say, from that low. And you can see over here that these contracts could have been bought on the S&P there for a low of 755. And they went right here, they peaked right here at 22.25 on 721 now. And that was all correlated and related to this breakout reversal off of that bottom as we went through it live. What we're doing here is showing, once again, recap that reversal, MMTs. So the participation levels will be correlated to how price action identity weakness is established. So you have to establish the weak price action momentum, meaning that at certain levels, at certain breakout tops, they start to weaken, and then just like going up this way with our platform and how we trade equities is also always going to be understanding that when you were selling off over here, you could see where the calls were. These calls still got upside on the 1345. Yes, they can. They can go up there and test that 30. If we gap up above it, you're darn right. And then they will be inflated. This is what happens when they get inflated. The calls went down. Why? Because you had that reversal here all the way down here, and that took that inflated call at the time. The 1345 was up here above $30, for crying out loud. And it was on sale here when we had that reversal. And there's a lot of money made. Got something like 20 contracts down here at $8, and you're getting a $13 move. Well, that's $26,000 in that 4-day trade. That's not a bad living on the S&P. We'll be looking at how we're going to do the calls, the puts. We'll be checking everything out right here as we move through with the headline news volatility that follows in the opening bell. The time is 11:29 a.m. Pacific Standard Time, 7/24, 2011. Welcome to the SMF Index calls and puts based on headline news that creates volatility. Volatility only increases as it has for the last 5 months. We said it would. It's on stockmarketfunny.com site. Go type in indexes and you'll hear it then. Take a look at the time and the date though. So that 1370 right here, okay, and it wouldn't be surprising if we did get a resolution. We had a breakout. I mean, up and out of the money 1400s or 265, and so we would have to look at the prices. What we'll do is we'll take the 1400, we'll put it in here for Ken Flag. Okay, so there's 1400. We'll also take a look up and out of the money. Let's take a look at the 1395. Boy, you can see them spreads. 1395. And let's do the 1380 as well, because it's 660. Let's take a look at that one. All right, so let's get this out of the way. These are the contracts right here. Go to page save, MMT. There they are. Let's take a look at this 1395. Here it is at the bottom down here. This is what I want to show you. 83 cents. And heck, they're up here at $8. They still have upside to go. Look at the premium they stole. And the thing about it is, they really dropped the bids in the contracts. And that happened during this reversal cycle right here. That got inflated right there on the 1395 call up there at the high. $8 price action. When that gap down happened, that's when this daily reversal happened. And the continuation really slammed it down. You can see here. And we finally got to a bottom here. And this is a 1395 call with a daily reversal chart in play. And that premium was way up there, and they took it down to the low right here. 83 cents was the low on 7/18. Now, are we even close to 1395 on the S&P? No, we closed at 1345, 50 handles from there. But there was still a good trade, $1 here, up to $3 and something. It's over a $2 gain within the premium structure of this call, 1395, up and out of the money. And once again, here's that 1370 that we're talking about. It broke out up here to $9. Remember, that low over here was $2.63. Okay? So we're going to be monitoring forward, and we'll look at the puts in the next segment. I do have a 1330 put that's getting awful wholesale here. It was up here at a retail price. The high was 46.94, and we're starting to get down here now. The low was 17.20 on Friday. So we're starting to get down here where these can fall even more, a lot more, if we go the other way on the call side of things that we've been showing in here, MMTs, and how to trade the S&P 500. one of the things you want to know is the 1330 put is $15 out of the money. The close on the S&P was 1345, so there's a $15 down and out of the money. Just call it below the market. 15 handles below the market. That's always what it is. So if the S&P breaks higher, of course this is going to go lower. 1350 put on the S&P, boy, they were way up here at one time when we were having that last correction. $92.95 was the high on 6/16, and we hit that low intraday here at 24.40, popped right back up when the markets were selling off, and we know what days they were, because all we have to do here is go back and look at this daily chart. And basically, when we look at a daily chart, we look at where the corrections were. They were all over here during that cycle, going down mathematically in our application there. And we all understand that when you have breakouts, you have breakdowns over here. Okay? And if you learn how to do everything with this daily chart, okay, you're going to understand when to buy, when to sell the puts. They were inflated. This was a good trade. And we're getting down the levels here on this 1350 put in the S&P is right at the lows were 25.40, and that high, that top down as it appears to me, and the previous day right here when it gapped down, the gap down high, the opening gap down high on these contracts were 30, and they could have been bought over here for 25.20 that day, intraday low. So 25.40. The closing price on Friday that was only 25.65. But my point of it is that the high, from the high down, you have $29 on the high here, and that's an in the money put, meaning that the S&P closes at 1345, and if I go up toward 1350, naturally I'm going to lose more value here. But at some point, when I have a reversal in the S&P 500 on a daily chart, whenever we ever have a reversal here, we're going to know what to do. And a half bar is 1348 in our platform. So this is the longer view of the S&P right here. This is it. Okay? And we had pullbacks in here now, because we have on the daily. So the contracts are going to trade a certain way. So that means if we get a correction, that this 1345 put, which is $5, it's at the strike price where the S&P closed, and that's in the money now. And that 1330 that we talked about, remember the 1330 put? That's $15 below the strike price, and that's this one over here now. Okay, 1330 put, SMF MNTs. We'll work on this more later. So by understanding what's going to happen in daily movements is going to also tell us, once again, the bottom line is, where is that price action being deployed, and what are the reasons why, and why will it be successful, and which way is ascending and which way is descending in price action value, and how to learn to trade the volatility now. See, this is great trades. And volatility, upside volatility, it'd be time to sell up here, okay? And when you came down, when the S&P was breaking out, of course, these were breaking down, and if the S&P breaks up toward 1370, that means that this put option right here could get down to 560. They could take another 20 handles out of it, should that be the case. And that means, yes, you'll get some upside in the 1370 call, because you will, and they may not give you as much premium, because all they have to do is set the bid and ask price at a certain level within its spread, price action spread range, and sometimes you don't get as much as you want, but you still come out ahead. So it's knowing that why this could go a lot lower, and why the 1370 call over here, here's a 1370 call, why this could keep going back up toward the highs up here, and there's still a move in here. You know, there's a $4 move in this S&P. If we and there would be a $4 move down here though, or more. They can take out more premium on the downside. S&P 500. How to trade index options relative to the S&P 500 index. MMT log off.